Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Before we start, I just wanted to lay out and let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. Okay, so a quick look once again at my longer term monthly charts first, as there is some very interesting actions taking place on my daily chart, which I'll deal with shortly. So we can see that the action here, since as far back as the low seen in August last year till October this year, built a sideways action. I noted this action 38 weeks ago, and I'll expand on that part shortly, but I just wished you to see that this sideways action seems to be ending with October's combined monthly key reversal up and bullish engulfing pattern, and November's follow-on high, though, as is usual, a contrary pattern seems to be developing in December. We nevertheless seem to have established a basing action around a triple bottom formed over August 2024 to August 25. I once again, as I have done for quite a few weeks now, feel obliged to caution you on the possibility of a false break higher. But even now, this seems unlikely. Then we have a primary target on this longer term chart, up in the 11.89 area, with a secondary harder to reach target up in the 12.44 area. In the way is the bright red neckline, currently at 12.13.5, and some congestion seen between 11.41 to 12.32 from early to middle 2024. And this seems to be what is affecting the market right now. Back now to my daily charts, and you can see that the same bright red neckline is hovering over the market just underneath the top of my daily chart. Now, in addition to this bright red neckline, 38 weeks ago I highlighted here on my daily chart a bright pink July 24 to October 25 rectangle pattern, which you can still see, which is currently 979 to 1105. This net pattern had been operational until late October, when prices punched up through the upper pink trend line, taking most of November to stabilize over it. This is the original pattern that was formed by the actions I mentioned when I discussed my longer term chart. Now, I said 3 weeks ago, and I quote, "Last Thursday the 23rd, we had a bow tie formation crossover of the short, currently at 11.38, short medium, currently 10.84, and medium moving averages, currently 10.55. The moving averages entered disorganized and they exited in the correct manner. Thus, in theory, between 50 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. Hence, please look out for these between the 13th to the 20th of November. I should point out that the moving averages exited in a bullish manner as well." End of quote. Well, we did see some excessive action on the 17th and then the recent high on the 18th. And between the 17th to the 19th of November, we had a 3-day bearish evening doji star pattern. So I guess that answers that question. Now, 2 weeks ago, prompted by the bullish actions on Winnipeg canola the previous week, I drew a dark blue mid-December 2024 to early August 2025 bullish Andrews pitchfork. What is noteworthy about this pitchfork is the effect the dark blue middle time, which is currently 11.53.5, had and has on the market since the start of November. It was a cap, a pierced cap, but a cap, and one that caused the market to develop into perhaps the most interesting short-term pattern here. You see, we have since late October formed a head and shoulders pattern, possibly a head and shoulders top pattern. This is not fully justified as yet, as prices have only yesterday dipped below the bright green neckline, which is currently at 11.37. Thus, I cannot lay out targets below as yet, but I can set out some potentials. Hence, a primary potential will be down in the 11.07 zone, just around where the bright pink broken upper trend line lives, whilst a secondary potential, a harder to reach potential, will be down in the 10.80 zone. Please note these are just potentials at this time, as we sit with only one close below the bright green neckline, and there is still a significant chance for a false break on the downside. One final feature, and this is right now in development. We are set up to make this week a weekly key reversal. Thus, if we close tomorrow night either over 1146 or under 1134, then we would be on. Anything in between would have a lesser outside weak pattern. At the moment, we are looking at a weekly key reversal down, which would tie in with the earlier head and shoulders top pattern. But please remember, we still have Friday to go. Chicago soybean meal. Okay, so in 2025 so far, we have had a pair of descending wedge patterns plus a reverse head and shoulder pattern that have broken on the upside, resulting in a significant move higher, reaching topside targets and becoming something that had been and may still is altering the whole strategic basis of this market, a point which I'll discuss shortly. In the immediate past, the market has peaked up over the significant resistance of the dark blue trendline extension to the July to September 2021 descending triangle pattern, which is currently at 314.60, and started stabilizing over it in late October and early November. It looked initially as if it was possibly forming a base. Meanwhile, the top side had resistance, as I stated 4 weeks ago, and I quote, "Two others that need to be noted. The first is easy enough, as it's the high for 2025 at 326.60. Interesting, around there we have some other resistances, notably the 50% Fibonacci line for the May 24 to July 25 move at 326.20, plus some congestion at 326.90. So that altogether, they make an overhead congestion area between 326.20 to 326.90. Then above this is the 61.8% absolute Fibonacci line at 336.30, and I'll leave it at that." End of quote. At these levels, we have indeed found resistance, though the peak 2 weeks ago was short of fully testing the 61.8% absolute Fibonacci line. The next question was simple, and I asked it 2 weeks ago, and I quote, "The next question is simple. Do these resistances form a top or a bullish halfway hesitation?" The answer is not obvious yet, though 2 weeks ago we did have a horn top which failed, and then this week, indeed the start of this week, had a higher 2-day bearish tweezer top pattern, from which we have saw the outcome yesterday in a fallback below the interesting 326.20 to 326.90 congestion. And that's the end of the quote. Well, the question has been answered, as what we have formed over late October today is a head and shoulders top. The top I originally spoke about 2 weeks ago. Prices broke down through the bright red neckline, currently at 318.90, on Monday this week, as well as later the dark blue trendline extension. Thus, I've laid out some potential targets below for this pattern, of a primary target X down in the 308.70 zone, and a secondary hard to reach target X1 down in the 299.80 zone, close to the 50% Fibonacci line for the whole of 2025 so far at 298 even, and at the start of the big congestion, from April to August 2020. Finally, this commentary would not be complete without my discussing a portion of my commentary I've repeated for 130 weeks. So for about 2.5 years. It is the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and been living in the shadow of this pattern ever since." End of quote. I've also added ever since, and I quote again, "If there's only one thing you take away from my musings, let it have been those words." End of quote. For 2.5 years, the shadow of that pattern has darkened the skyline of this market during a whole time. During October, it looked like we might be seeing the first signs of the light of dawn stretching through the darkness. I'm sorry if I sound vaguely political, but this bearish longer-term pattern has been such a cornerstone and companion to this market for so long that it's hard to imagine a time when it may end. But end it must. However, with this construction of a head and shoulders top pattern in recent days, it looks like that might be delayed. Chicago soybean oil. 3 weeks ago I said, and I quote, "For all the activity in soybean complex, it was time I finessed this daily chart to show a better and clearer view of what is going on. Thus, the key pattern here is the newly expanded, sorry for the pun, the newly expanded dark blue April to date ascending expanding wedge pattern." And that's currently 51.67 to up off the top of my daily chart. End of quote. This pattern, I suppose, unsurprisingly in some ways, has had false breaks and is acting more as an attractor than a trend line these days, especially the lower trend line. I also added 3 weeks ago about this market and since, and I quote, what I can say is twofold. Firstly, in the immediate market, please pay attention to the overhead mauve medium moving average, currently at 51.93. As this cap price is in October, and also the gold long moving average below, currently at 50.11, which, whilst it is not perfect, it has helped bolster the second thing to watch for. And that is both the 50% Fibonacci line overhead at 53.59 of the July 23 to August 24 move, and the 38.2% Fibonacci line below at 48.95 of the significant March 20 to April 22 move. These two features seem to be better at defining the market right now. End of quote. These last few factors about the medium and long moving average, well, they sort of still apply. The gold long moving average below does, but last week we pierced and closed over the mauve medium moving average above, though we have since headed back down, sort of. However, all this action has led me to draw a potential new pattern. A bright red mid-October to date ascending wedge pattern, currently 50.22 to 53.10. And this uses the dark blue lower trend line like the center line of an arrow. The only issue is that this ascending wedge pattern does not yet have the requisite number of touches. 5 needed in total, with at least 2 on one side. And so far, we have just had 2 on each side, though we might look at the high this week as possibly being a 5th. This pattern then leads me to another possible pattern, a pattern that generated the ascending wedge pattern in the first place, and that's the mid-September to date double bottom. This is not an elegant pattern, but it's still there, and the only issue is that we have not triggered it as yet, with prices down where we are. I said 2 weeks ago about this, and I quote, the neckline for this pattern is at the 52.11 level, and we have had a close over it this week, but just the one, and we swiftly turned lower, so there is no confirmation as yet. However, I feel obliged to lay out not targets but potentials for such a possible move higher should it occur, in between my weekly commentaries. Thus, a primary potential would be up in the 53.59 area, right where the 50% Fibonacci line of the July 23 to August 24 move is, and a secondary harder to reach potential up in the 55.56 area. The primary potential is certainly doable only if we can overcome the mauve medium moving average and reach that 50% Fibonacci line. End of quote. Well, there's a lot to unpack there, as we most definitely had multiple consecutive closes over 52.11 this week, but, and it is an important but, these look like being a false break. Hence, I would still stay with the numbers, but that any break higher needs to be verified, and that is not a false that is not a false break. Hence, I would look now to see if we can make consecutive closes over the 53 area and look to verify. And I know that isn't pretty. It's not much on the upside to reach target X. Well, the primary potential target X, shall we say. But that bright red uptrend looks like where it will be on the top side. Finally, and this I warned about 2 weeks ago, we have had a monthly key reversal up in November to add yet more fuel to the mix.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.